Good evening, great people. Welcome back to another episode of 30 Days of Stocks. Today will be episode 16, day 16, where we will be talking about understanding financial statements. All right, I'm going to get a little bit of help from ChatGPT. Before I jump into the video, I appreciate all the likes. I appreciate the comments. I appreciate the subscribers as well. If you'd like to support the channel and you'd like to see this channel grow even further, all you got to do is click that link in the comments, make you a SoFi account, and add $50 to it. You will receive $25 in about 2 or 3 business days. And you can do whatever you want with that 25, the extra 25. I will recommend you invest it. If you know anything about investing, that is a 50% return on your cash. And you cannot beat that, especially in the stock market. All right, so let's get back to ChatGPT. You know that's my homie. I talk to him every day. I just talked to him earlier, actually. So let's see, 1 second. All right, ChatGPT. This is what we're going to ask ChatGPT. What are the key metrics to look for when analyzing companies in the stock market? All right, let's go. What you got for me, ChatGPT? So here's what ChatGPT says. Y'all ready? Okay. It says when analyzing companies in the stock market, several key metrics can provide valuable insights into their financial health, operational efficiency, and overall performance. Here are some of the most important metrics to consider. All right, earnings metrics. Okay, earnings per share or EPS. That indicates a company's profitability on a per share basis. And then you got price to earnings ratio, PE ratio. A lot of y'all have heard of that before. That compares a company's current share price to its earnings per share, helping to assess if the stock is overvalued or undervalued. Earnings growth rate, that measures the annual growth rate of earnings over a specified period. Revenue metrics. Revenue growth rate indicates how quickly a company's sales are increasing. Gross margin, the percentage of revenue remaining after deducting the cost of goods sold, reflecting the efficiency of production. All right. Number 3, profitability metrics. Net profit margin, that shows you how much profit a company makes for every dollar of revenue. All right. Return on equity or ROE. I've heard of that before. Measures how effectively management is using a company's assets to create profits, okay? ROA, or return on assets, indicates how efficiently a company uses its assets to generate earnings. Number 4, liquidity and solvency metrics, okay? Current ratio measures a company's ability to pay short-term obligations with short-term assets. Quick ratio, similar to the current ratio, but excludes inventory, providing a stricter view of liquidity. Debt to equity ratio, that indicates the relative proportion of debt and equity used to finance a company's assets, reflecting financial leverage. All right. Number 5, valuation metrics. Price to book ratio. Remember we talked about that the other day. PB ratio compares a company's market value to its book value, indicating how much investors are willing to pay for each dollar of net assets. All right. Enterprise value to EBITDA. I'm not sure what that is, but it says a valuation multiple used to assess a company's overall value relative to its earnings before interest, taxes, depreciation, and amortization. I never even heard of that before. Okay, whatever. Efficiency metrics, all right? Asset turnover ratio. That measures how efficiently a company uses its assets to generate sales, all right? Inventory turnover ratio. That indicates how many times a company's inventory is sold and replaced over a period. Market metrics, market capitalization. The total market value of a company's outstanding shares, indicating the size in the market. Dividend yield, a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. All right. Growth potential metrics. Free cash flow, FCF. That's cash generated by the company after accounting for capital expenditures, important for assessing financial flexibility. Price to sales ratio, or PS ratio, compares a company's stock price to its revenues, useful for evaluating companies with little to no earnings. Okay? Market sentiment and risk metrics. Beta measures a stock volatility in relation to the overall market, indicating its risk level. Analyst ratings. Recommendations from financial analysts can provide insight into market sentiment. All right. Using a combination of these metrics will give a more comprehensive view of a company's performance and help in making informed investment decisions. Always consider the context of the industry and the market conditions when analyzing these metrics. I appreciate you, ChatGPT. All right. And so I won't get too deep into this video. I just gave you the factual information. Hopefully you were able to retain the information. I know sometimes I stutter when I read or, I go over words a little differently than people. But, hey, this is free information and it is value in the video, being that, some people just don't know how to get invested in stocks. And this is 30 days of stocks. So this has been day 16. I appreciate everybody for tuning in. If you would like the Discord link, all you have to do is comment, hey, what's the Discord? I'll send it to you. It's absolutely free. You don't have to pay for anything. Now, the reason why I don't post it just in the comments and things like that is because I don't want any robots just joining the group. So it's kind of like a secret society, man, where we are helping each other, spreading information, helpful information. And in the future, you'll see a lot of our accounts grow, and you'll just be a part of the family, be a part of the team, be a part of the gang, and we'll welcome you with open arms. Remember, a win is a win, and we'll take it. I'll see you guys tomorrow when the stock market opens at 9:30. Have a great day.